Gaurang, let's talk about the first idea that comes in the form of Tech Mahindra. I'm sure there are lots of reasons as to one should buy this, but don't you think it's already run up quite significantly?
Well, Avan, good afternoon. If you just look at the performance of both IT and pharma, of course, your argument holds good when you compare with other sectorial indices, but when you look at the earnings, I think some of these mid-cap IT companies have actually delivered much better than expected numbers compared to the frontline IT boys. And if I look at the growth prospects going forward from here on, if I throw in the positivities of the new government's efforts of bringing in the internet platform, if I look at the overseas growth and of course the likely possibility of much more positive data points emerging, then I think it evolves very well for companies like Tech Mahindra to take advantage of those situations both on the global and local front. And my view is, rather our house view is that some of these IT mid-cap names are definitely going to give you better return going forward from here on. This on fallback of better product mix, this on fallback of better utilization, this is also on fallback of certain large ticket transactions and tie-ups that the company has done. And I think yesterday or day before yesterday, this company was in news about some small acquisition in the US market. And now, already as a merged entity, Mahindra Satyam and Tech Mahindra, it's already standing tall. And in terms of performance, they have given numbers which are much, much better than what our expectation is and the street expectation is. So, if you're looking at creating wealth and if you're looking at long term, then I think Tech Mahindra is the best place to be in terms of creating wealth.
Gaurang, hi afternoon. Axis Bank, and that's a hefty price target and upside that you foresee.
Well, yes, Aisha, good afternoon to you. We are quite positive, and in conversation with you earlier and your colleagues, we have maintained that our positive bias has been towards the private sector banking space. And if you just look at the numbers, public sector, private sector banks, then I think private sector banks have actually outperformed the public sector banks hands down. And my view is that not in this calendar year, but the first calendar quarter 2015, Jan, Feb, March, if domestic data points are supportive, then definitely you will see some initiation of interest rates coming in by the RBI governor, and that will transform into a huge positivities. And if we are talking about economic revival in India, then I think banking and finance are the backbone of this economic recovery that we are talking about in India. And not to forget, I think the moment you see environmental ground level things improve, policy change, then corporate India will also start investing in capex, which they have been holding back for a very, very long time. So that will be a great trigger for a loan book to grow. Asset quality, I think last quarter there was a minute uptick, Aisha, but I don't think that's a grave concern, because given the kind of performance of large names like Axis and ICICI Bank, I think it's only a matter of time that the performance will come back. Of course, we are looking at a target of about 535, but this we are talking about 1 year plus time horizon. And given the fact that not only the corporate loan book, but even the consumer loan book is likely to grow. Given that you have better numbers coming in, I think all sorts of personal loans will possibly see a positive uptake. So I take this into consideration, then definitely Axis Bank, which has just gone ex-split, right. I think trading below 400 rupees, it's a decent buy.
Okay, let's take on board then our first viewer query, which comes in from VSSN Murthy from Bangalore, and he's a student.
I have purchased 15,000 shares of Sri Renuka Sugar at the rate of 14.95. I just want to know whether this stock can achieve around 45 to 65 levels in a span of 3 years. I am a long-term investor.
Gaurang, unfortunately, even though he's long-term investor, perhaps Renuka Sugars may not be the best idea to stay put in.
Well, I'm more worried because he's a student, Aisha, and I think it's very important for a student to preserve the wealth. And if you're buying into something like a Sri Renuka Sugar and you're looking at 45 to 65, that means you're talking about almost 2 to 4 times price increase from here on, from the current acquisition of close to 15 rupees. And for that, Aisha, I think the company has to come out with super phenomenal numbers in terms of earnings visibility, which in the current scenario for the entire sugar pack looks very, very difficult. So I would say I think he is possibly making some small profits at the current CMP. My advice is that you are a student, you need to learn the curve rather than trend against the curve for the stock market. So it's better that you be with a large cap name. And over here I would like to suggest a name in the large cap four-wheeler stroke commercial vehicle play, that's Tata Motors. So either you can buy Tata Motors shares or Tata Motors DVR. For Tata Motors shares, given that their launches are in the domestic operation brand Tata Motors, one has taken place. Possibly in the next 4 or 5 months, you will see a couple of more launches coming in, thereby improving the market share of the India operations Tata Motors, that is. And of course, the contribution from JLR has been continuously bettering the top line and bottom line visibility. So I would say that it is better you exit Sri Renuka Sugar, and from a 3-year time horizon, you can look at much better returns in a company like Tata Motors. Of course, from a 1-year time horizon, we have put a target of 585. But if these domestic operations improve, Aisha, then you can increase the target upwards.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.